Welcome to the World Leadership Forum. My name is Kenneth Pruitt. I'm the Vice President for Global Centers, and my pleasure is to welcome President Ali from the Islamic Development Bank today and say that on behalf of the university, we are very honored by your presence, and we look forward to a lively discussion with our students and faculty. And to welcome to the podium Professor Jeff Sachs, who will give a more proper introduction to our guest. Professor Jeff Sachs, as you know, is the director of the Earth Institute, and I think the president knows that the Earth Institute is one of the most innovative structures, centers, institutes in higher education around the world. It has a very deep scientific basis with the scientist up at Lamont Doherty, but it also does a large amount of development work, direct development work around the world in almost every world country. I sometimes quip that I think the Earth Institute operates in more countries than the UN has yet acknowledged, creating countries as it goes. Jeff Sachs, of course, has brought enormous energy and leadership to the Earth Institute since he's been here, and the entire campus takes a great deal of pride in his accomplishments and the accomplishments of his senior leadership, and indeed of all the scientists who are working through the Earth Institute projects around the world, including, of course, the Millennium Development Villages Initiative and so forth. So please welcome Jeff Sachs to the podium.
Ladies and gentlemen, we're extremely privileged today to have with us the President of the Islamic Development Bank, Dr. Ahmad Mohamed Ali Al-Madani. This is an enormous privilege and honor for us, Mr. President, for you to be here. As I'll describe in just a moment, the Earth Institute and the Islamic Development Bank have entered into a wonderful partnership and common striving for work in the member states of the Islamic Development Bank to fight poverty and to promote economic development. So it's a special privilege to have you and your colleagues with us again today after a wonderful visit in June. President Ali is a national of Saudi Arabia, with an absolutely illustrious career and leadership throughout the Islamic world. But he also has some very important parts of his life in New York and in the United States as well. He was educated with a BA degree in Commerce and Law from Cairo University, and then earned a master's and PhD in Public Administration from the University of Michigan and from the State University of New York at Albany. And so we know you're a New Yorker also at heart, and it's great to have you here. After his university degrees, President Ali returned to work in both academic and development work in Yemen, and then as acting rector of the King Abdulaziz University in Jeddah. Then in 1975, the Organization of the Islamic Conference, now the Organization of Islamic Cooperation, decided to create a development bank for the Islamic countries. Naturally, they turned to President Ali to become the first president of the bank, and he has done such a remarkable job in guiding this institution to become one of the most important regional development, or it's not regional, it's worldwide, but one of the most important multilateral development banks, I should say, in the world, that he has served as the first president from 1975 to 1993, and then asked to continue to serve as president from 1995 until today. And the bank has thrived and has a remarkable reach. When you think about it, there are 56 member countries of the Islamic Development Bank. and combined population of those member countries is 1.5 billion people. So this is a bank which has a worldwide reach that covers also more than 20% of the world's population, stretching from the Americas to North Africa, the Middle East, Sub-Saharan Africa, and all parts of Asia. It's an incredibly exciting institution with the span from some of the world's poorest nations to some of the world's richest nations, but with a commitment to share the development experience across all of these countries, and with a great vision and a great ethic behind this commitment to ensure shared prosperity across the Islamic world. One of the exciting aspects of the bank, and one that brings President Ali to the talk today, is the outstanding financial record of the bank and its outstanding credit rating. I say only with a mild amount of envy, but mostly with admiration, that the bank is a AAA organization, something we can no longer say about the U.S. Treasury. Among fewer and fewer countries in the world, fewer and fewer governments. But the bank's AAA rating was just recently reconfirmed, and this is a demonstration of the very sound financial principles that have governed the bank. I'm thrilled, Mr. President, that we signed a memorandum of understanding in June to create a very dynamic, broad and engaging partnership on many aspects of the bank's work. We at the Earth Institute are committed absolutely to our core in sustainable development around the world. We are working in so many of the member countries of the Islamic Development Bank that we see your good works, and we have the absolute logic and felt need to partner together and see in a shared way the opportunities that this partnership can bring about. Our partnership, just to mention very, very briefly, will include a tremendous effort on community-based development, especially throughout Sub-Saharan Africa. A part will include a partnership of the bank with the Millennium Villages Project. A part will be the Earth Institute's support for Sustainable Village Initiative of the Islamic Development Bank, and part will be a partnership of both the bank and the Earth Institute behind a 6-government initiative in the Horn of Africa called the Dryland Initiative, where these governments, in the face of drought, have come together to raise the living conditions and the long-term prospects of the pastoralist communities. And this is an area where we will be working together. Our teams are out in the field right now together in Chad and Sudan, and it's already a partnership that is delivering real results on the ground and joint work together, so it's extremely gratifying. Now, President Ali asked to speak today about a topic that is obviously of pivotal importance, and that is about the international financial crisis and essentially the crisis of debt in the global economy. We're every day being rattled by more and more banking and sovereign debt crises. One just has to look at any news report hour by hour to ask which bank has more recently been downgraded in Europe, which sovereign debt is under attack, whether the European Union will be able to get its act together to address the Greek crisis, or whether there will be a spillover of that crisis to other countries. I think President Ali has an important message to talk to us about today, about ways that Islamic finance and different approaches to finance may prevent or address this kind of systemic crisis. So we're very eager to hear your words and your guidance, and we're especially thrilled to be welcoming you back to Columbia University today, Mr. President.
Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, I am very delighted, really, to be here at the Colombia's World Leaders Forum with this distinguished audience. Let me, first of all, thank my dear friend, Professor Jeffrey Sachs, for inviting me to Columbia University. I would also like to thank Dr. Kenneth Prewitt for his introductory remarks. I am pleased to speak to you today about a subject that has gained crucial importance in the wake of the global financial crisis. The current crisis, which, as you know, started in 2008, was described by the governor of the United Kingdom Financial Services Authority, Mr. Adrian Turner, as arguably the greatest crisis in the history of finance capitalism. It took around $18 trillion, or more than 30% of the world gross output, by a number of industrial countries to stabilize the financial system and to revive the international economy. Nevertheless, the adverse effects of the crisis still persist through continuing economic slowdown and rising unemployment. The crisis, which according to most analysts originated from subprime lending in the United States housing sector, soon spread as a wildfire to the whole world. The financial crisis rapidly turned into a global economic crisis, affecting the real sectors in all economies of the world, both rich and poor, with different degrees. Ordinary people worldwide, innocent bystanders, who cannot be conceivably related to the causes of the crisis, were caught off guard and their livelihood affected. The most vulnerable ones in the society suffered the most, particularly as the commodity prices skyrocketed. As a multilateral development financial institution, we in the Islamic Development Bank Group helplessly observed the already scarce funding for poverty-related programs in developing countries dry up as resources were diverted away from development needs. The work of many years on social advancement was hampered, and the suffering of the poor and disadvantaged continues to increase day after day. This only shows how interconnected and interdependent the world we live in. It also shows how responsible we should be in managing and governing the financial and economic systems. This crisis particularly indicated how fragile our financial system has become, with unprecedented growth of debt. The world has experienced more than 100 financial crises since 1945. This makes it incumbent upon all of us to look for a new architecture that minimizes the frequency and severity of such crises in the future. The architecture of the global financial system and its governance structure are currently, as you know, being reviewed by the G20 leaders. With this in mind, I will try today to reflect on some of the ideas that could be considered while embarking on this review. I will also try to shed some light on the potential contribution of the emerging Islamic financial industry to enhancing the stability and resilience of the global financial system, which are essential to development and growth. Since it is not possible to think of a better architecture without first determining the primary cause of the crisis, let me first shed some light on the primary cause of the financial crisis in the past decades. The generally recognized most important cause of almost all of these crises has been excessive and imprudent lending. This raises the question of what makes it possible for banks or lenders in general to resort to such an unhealthy practice of indulging excessively in high-risk lending, which does not only destabilize the financial system, but also not in their own real interest in the long term. There are many factors that explain this. However, I shall focus today on one which I think is important and relevant to the subject of my topic. This factor relates to the inadequate market discipline in the financial system resulting from inadequate risk-sharing practices. The false sense of immunity from losses caused by the inadequate risk-sharing has introduced a fault line in the financial system. Consequently, many banks do not usually exercise proper due diligence in their drive for profit maximization. This leads to unhealthy expansion in the overall volume of credit, excessive leverage, and unsustainable rise in asset prices and speculative investment. Unwinding later on gives rise to a steep decline in asset prices and to financial fungibility and debt crisis, particularly if there is also overindulgence in short sales. Jean-Claude Trichet, President of the European Central Bank, has rightly pointed that a bubble is more likely to develop when investors can leverage their positions by investing borrowed funds. Furthermore, when lenders are imprudent and lend beyond the capacity of the borrowers to repay, they resort to complex instruments to protect themselves. This practice ends up expanding the debt market even further. These complex instruments create a trade market whereby traders buy and sell debt to make quick profits with no real asset being created, nor real economic value being added. The delinking of profit making from the real economy is a major cause of excessive lending and is at the heart of my subject today. To start with, it is important to underline the imperative of risk sharing that Islamic finance encourages through its emphasis on equity, sales-based, and lease-based financing instrument. While debt is allowed in Islamic finance, it is not allowed to grow on its own. It can grow only in step with the growth of the real sector. Thus, by integrating debt creation with wealth creation, finance is properly positioned as means of promoting productive activities and cannot be used for speculation or be an end in itself. This prevents the creation of an inverted debt pyramid and thereby largely mitigates financial instability. Experience shows that when creditors take an active role in the underlying economic transaction, they become more prudent in extending credit. This introduces greater discipline into the financial system by motivating financial institutions to assess the risks more carefully and effectively monitoring the use of the funds by the borrowers. The dual assessment of risks by both the lender and the borrower injects greater discipline into the system and reduces excessive lending. Therefore, the most preferred forms of Islamic finance are partnership and profit and loss sharing. Renewed efforts in the wake of the current global financial crisis in search of a more resilient and robust financial system based on stronger links between credit and the real economy brought some attention to Islamic finance. The principles of Islamic finance can minimize the severity and frequency of financial crises by introducing greater discipline into the financial system and requiring the financier to bear or share in the risk. Islamic finance also requires the creditors to bear the risk of default by prohibiting the sale of debt, thereby creating a proper enabling environment for ensuring risk mitigation through sound due diligence by those who extend credits. Before closing, let me briefly highlight some aspects of the Islamic financial system that I believe can contribute to the ongoing efforts of reforming the global financial system. These aspects include, first, to increase the share of equity and reduce the share of debt in the total financing of economic activities. Second, when the need of debt is justified, it should be extended based on sound due diligence that includes logical risk-reward consideration. Third, credit should be confined primarily to transactions that are linked to the real sector to ensure that credit expansion moves more or less in tandem with the growth of the real economy. Fourth, all financial institutions, not just banks, need to be properly regulated and supervised so that they remain healthy and do not become a source of systemic risk. Fifth, respite should be given to debtors who are in real distress beyond their control. The giving of respite in such circumstances, along with the necessary restructuring which Islamic finance requires, would also help reduce the rapid downward slide in asset prices caused by the forced auction of borrowers' assets. Let me emphasize that the principles of Islamic finance are not specific to the Islamic faith. They are part of not only most divine religions, but also secular paradigms. Therefore, the underlying principles of Islamic finance have been described as ethical and universal. The Economist magazine has rightly observed that the world needs new ways of thinking about finance and the risks it involves. I humbly believe that Islamic finance offers basic principles for this purpose. At a time when world leaders are calling for deep financial reforms, it is important to have our financial systems rebuilt on widely accepted ethical and moral basis to serve the common good of humanity. Once again, dear ladies and gentlemen, I wish to thank my dear brother Jeffrey Sachs, also to thank Columbia University for inviting me to speak at this Columbia's World Leaders Forum. And I would also like to thank all of you, audience, for your interest and attention. Thank you very much. Wassalamu alaikum.
Mr. President, thank you for those wonderful remarks. We're going to have a question and answer And I would encourage students in particular, but anybody, to line up. We have 2 microphones. I would ask you to identify yourself and your position in a program here, or what brings you to the community. I wanted to note, Mr. President, I think there's a wonderful relationship between the precepts that you outlined and some ideas that have come in U.S. Academic circles led by a professor at Boston University named Lawrence Kotlikoff on limited purpose banking. And the idea of limited purpose banking is to stop the fractional reserve leveraging of the banks. But banks would become more like mutual funds, in fact. When you buy a bank, you're actually buying some equity ownership in the underlying assets that this institution is lending to. And so there's always a backing of the deposits with the underlying assets. And it's the same principle, and I will make the connection. He's a dear friend and has been promoting this kind of financial reform. So I will make the connection, and I think it will be quite interesting to show that the principles that you've enunciated of Islamic finance are finding real resonance in the financial theories post-crisis. So I find that very, very, very exciting. Let me turn first here to first question, if you would identify yourself, please.
Yes, Assalamu alaikum, Dr. Ali. My name is Sheikh Musa Drame. I am from the Islamic Cultural Center. Dr. Ali, between the Bronx and Manhattan, there is only one Islamic middle school, which is our school, Islamic Leadership School. And in 2002, we have applied funding from your bank, which was approved in 2005. And we received Dr. Mohammed Salim from the Special Assistance Unit 2 times at our school, and ever since we have not received a correspondence or anything from the bank. So we were wondering if the project that was approved, which we have the evidence, is still approved or it's been canceled. And I brought some of our students here from the school. Can you guys stand up? Thank you very much.
Thank you. So I hope that you'll make the connections.
To answer?
Yeah.
Okay. First of all, I want to comment, brothers, on the assets, what you mentioned about this bank. This is similar to the sukuk. IDB now is mobilizing resources from the market through the sukuk. The sukuk also is directly connected with the actual asset the bank has. So it is related to real properties, projects. Most of them are leasing or installment sale. We use it for our sukuk. So the borrowing of IDB from the market, it is actually related directly to the actual projects which we are financing, so to the real economy. Concerning this question, brother, I am very sorry, I don't know about this school, but I promise you, now you give me copies of correspondence, I promise you I will follow it, inshallah, and we hear an answer within 1 week, inshallah.
Shukran, thank you.
شكرا. صالح في الاستكمال.
Please.
تاخذ منه الله يخليك.
If people could maybe raise the mic, to really speak into the mic.
Hi, my name is Thomas Ho. I'm from the law school. Mr. President, regarding the principles that you just enunciated, can you describe a little more on how they can be applied? Should they be some certain principles that the global governance organizations should adopt in their charters or in their day-to-day decision-making? Or should, say, company executives or bank executives, before assuming such management positions, read over these principles and maybe in a written statement agree to abide by certain principles when making their decisions?
Yeah.
Thank you.
Yeah. Actually, I am not advocating to have Islamic banking as alternative to what is practiced now. I'm just saying that in the restructuring of the world financial system, we take in consideration these principles. In other words, there should be control on the excessive lending. And also the banks should also take risk in lending. This means they should follow also the projects which they are lending along with the borrowers. So these points we wanted to be a part of the new financial system. We are not advocating this to be another alternative. I want to be clear on that. So my advice is that let us benefit from these principles in our new system, new financial system, new banking system. I hope I am clear on that. Yes.
Assalamu alaikum.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
My name is Manib and I'm a first-year undergraduate. My question is, how long do you think it'll take before we see major lenders in the West start to adopt more of these principles and adopt more risk in their lending?
What is the question? Naam?
How long will it take before we see these practices adopted in the Western banking institutions?
Yes.
Yes.
Yeah, of course. I cannot answer this question. We are advocating, we are suggesting, as I mentioned, in the restructuring of the new financial system, the policy makers to take in consideration these principles in order to minimize the crisis of the future for their repetition as well as their severity. This is what we are suggesting.
Maybe could I add just a word about some of the dynamics that we've seen this past weekend? One of the motivations for the current system is the benefits to the managers, the CEOs, because they take high risks. When they win, they take home billions of dollars in pay, and when they lose, their shareholders go bankrupt. But they walk away fine. Even they get invited still to the White House the next week. So it's a general agreement, not, I would say, these principles, but that there should be a movement towards less risk and more capital in the banks and less leveraging. But President Ali is putting it further that core practices should change. But even on the modest changes, the bankers are pushing back very hard. And somebody who's considered the lead Wall Street banker right now, Jamie Dimon from JP Morgan, had a shouting match over the weekend with the governor of the Bank of Canada because he objected to more stringent capital requirements put on the bank. Mr. Dimon wants big salaries, big bonuses, big incomes, and he wants government to bear the risk. If the banks fail, that there will be a bailout. The rest of society is pushing back. Who will win is a big question because Mr. Dimon pays a lot more campaign contributions, he and his colleagues, than his depositors do, perhaps. So this is a matter of power and influence as well as proper principled banking regulation.
Mr. President, my name is Rahima, and I'm a second-year master's student at the Schools of International and Public Affairs. And throughout the crisis, there was a lot of mention in the press, both Western and elsewhere, that the Islamic financial system was really exceptional in being able to withstand the issues that were happening. But the case of the Islamic Bank of Britain showed a bank that showed a lot of promise, but in a few years was really on the brink of bankruptcy and needed a cash injection from its investors in Qatar to be able to stand on its feet. And I'm just wondering what you think the factors were that led to this really quick change in just a few years, and whether these factors were internal to the bank or true for the entire Islamic banking industry. Thank you.
I'm sorry, are you saying that Islamic banks in England went to bankruptcy?
No, I'm saying that the Islamic Bank of Britain, which was instituted in 2004, only a few years later lost like 96% of its share value and needed millions of dollars of cash from its Qatari investors to be able to survive.
Islamic banks? Britain. There's just a single institution, sister.
Yes, and I'm
Single institution. There could be reasons of management, could be any other reasons. But as you know, Islamic banks as a whole, as an industry, it is the most growing industry in the world. They estimate their growth, annual growth, is 15% all over the world, whether it is in OSCE member countries or outside OSCE member countries. So the industry as a whole, I think it is growing very rapidly, and they are flourishing. They proved also to be more resilient in the financial crisis, as you know. Of course, they were not affected by the financial crisis, they were affected by the economic crisis. When the financial crisis became economic crisis and everybody affected, also some Islamic banks have been affected. But as a whole, if you look into all the documents of the IMF and the others, you find that the Islamic banks were more resilient for the financial crisis. So if that happened in India, it is just a single bank, but not the industry as a whole.
Thank you.
Thank you. Hi, Mr. President. I'm Hunter Little. I'm a first-year undergraduate here at the college, and I'd like to preface my question with the fact that my economic knowledge is limited to an introductory course I took in high school. So with that in mind, it's my understanding that that your bank operates, or that your group operates under Sharia, which entails no interests, correct? Like the belief in no system of interest or anything like that. If I'm correct, correct me if I'm wrong, please. But so with that system in place, how does that? Do you think that this should be something that should be looked at when we're looking at corrections for our international finance system? And also, how does that system of no interest affect your dealings with other banking groups and with other financial systems? Thank you.
As you know, the Islamic Development Bank is now almost 37 years old, and all its operation is done on the principles of non-interest. And the bank developed a number of modes of financing. All of them do not include interest. But I want to again be clear here. I am not advocating Islamic banking to be adopted as a whole. I'm just proposing that elements of Islamic banking to be considered in restructuring the new financial order internationally. But Islamic banks has been proved and has been practiced in many countries, as you know, whether they are in Muslim countries, in non-Muslim countries. Also in non-Muslim countries has been practiced by Muslim and non-Muslims, like in Malaysia. There is a Chinese bank which is operating in accordance with the non-interest basis and so forth. So the system itself did prove itself in the past 35 years. But at the same time, I want to repeat, I am not advocating that to be the international system. I am just suggesting that elements of this system to be injected in the new financial international order to benefit from these principles in order to have less dependence on debts and mainly on risk sharing in order to put a limit to excessive lending. That's my message.
Thank you, Dr. Ali and Dr. Sachs. I did want to help get a sense of the status of your negotiations and recommendations to other regional bodies, particularly the African Development Bank and some of the states which you know are going through elections now, particularly Mali and Ivory Coast, two ends of the spectrums. I'm a firm believer in worst case scenarios. If, as Dr. Sachs says, Europe and American-based and internationally based institutions do not, in fact, listen to your recommendations, even on a small scale? Would you give us a sense of what your recommendations are to certain regional bodies to quarantine themselves from a double dip or even a full-blown depression, and how they can actually put up some of the barriers by which they can defend their economic system and the viability of their nation states and their populations against a contagion that has all the possibilities of breaking out? Thank you.
I'm sorry because of the echo.
Yes. No, the acoustics are tough. The question is, given that the European and U.S. banks might not listen to this advice and the regulators, and there could be another hit, how would you recommend that institutions protect themselves against what could be another wave of downturn or crisis? So mainly the question of insulation from the global shocks.
Yes. My advice to those institutions to benefit from the principles and the practice of Islamic banking. In other words, to do less excessive lending, to be more prudent in dealing with your customers. You should be sure that the success of the project is acceptable. Don't just give the loan and go and sleep. Give the loan and follow it. I think if these principles really has been accepted, we will not today have the problem of the debts, especially in developing countries. Because most of the debt in the developing countries came before because there is no follow-up from the banks and the institution who lend them this money. If they gave them their experience in administration, if they followed with them the implementation of the projects, I'm sure we will have been a better world today. So my advice is to try to benefit from these principles which I mentioned, and to know your customers very well, and to follow up about your loans. Don't just give it and go and leave it to the people whom you are lending your money to. That's my advice. I hope it answered your question. Thank you.
Salam, Dr. Ali, Dr. Sachs. Thank you very much. My name is Josh Keller. I'm a first-year Masters of Development Practice student here at Columbia School of International and Public Affairs. And my question is regarding the transition to some of your policies, which I'm really a huge fan of. But sadly, especially with the U.S. economy, we live in a world where it's driven by personal incentives, and it's been driven by those personal incentives of those down on Wall Street. So how do we transition to this system that really lacks most of those personal incentives, which I truly believe needs to be done? But how do we work in this world driven by incentives to move out of that? Maybe if you could address something we could do here in the States, but maybe more on a global scale as well. Thank you.
Welcome. I'm sorry to depend on you again.
No, not at all. How to manage a transition to these principles of finance from where we are today. What would be the key steps, step by step, for the transition?
The transition, I suggest, of course, now the whole crisis are dealt with forums. You have the G20 forum, for example. They are working on the new financial order. I suggest that the bankers together, they can put rules and regulations and also principles, new principles of how to deal with the customers, how to deal with the debts, and they can suggest to G20, for example, and this to be globally adopted. And also, as you know, you have the IMF, they can play a major role in that also. So I think we can, as bankers or as developmental bankers, we can together build a system that you can suggest it to the G20, to the International Monetary Fund, in order these ideas could be accepted and international understandings could be issued for the regulators of the central banks worldwide.
Thank you.
I would also suggest you might look at Professor Kotlikoff's recent writing, because he also tries to take on a specific transition away from fractional reserve leverage banking to what he calls limited purpose banking, which has analogies to the Islamic finance. And so you might look at that as a technical pathway that he's suggesting as some ideas about how a transition could be made.
Thank you.
Please, we'll take two more questions.
Thank you, President Ali, for coming to speak to us today. My name is Mona Jabir. I'm a student at the Masters of Development Practice at the School of International Affairs. My question is, given that Libya is the second largest shareholder of the bank, owning 10% of the shares, with a change in the Libyan regime, has that posed a threat on the funding for the bank?
Given that who's the second largest?
Libya.
Libya. Oh, yeah. Okay. Implications of Libya being a large shareholder of the bank, does that pose implications for the bank?
No, not at all, really. Of course, until now, IDB is not operating in Libya now, but IDB will be very ready to operate in Libya. Libya is one of the major founding members of the Islamic Development Bank, and IDB will be very happy to fully cooperate with them to provide technical assistance as well as to provide other modes of financing in order to help them at this stage. They are in need, of course, mainly to find jobs for the young people, and IDB could participate through microfinancing program, which we are considering now for Tunis and Egypt, and we can consider it also for Libya. So I don't think there is any negative effect because there is no also overdues or any big problems in Libya. So we don't expect any problem, but we will be ready to provide assistance to the Libyan government, to the new Libyan government.
Please, last question.
I am Ardan Soud. I am first-year student at School of International Affairs. And I want to ask, do you find the policies which are implemented in Greece, do you find them right? And do you have any other suggestions to cure the problems in Greece?
I missed it also, sorry.
I wonder if...
Could you hold the mic up?
Okay.
Yeah.
I wonder if Mr. President finds the policies implemented in Greece right to cure the economic problems?
In Greece?
In Greece.
Greece?
Yes.
Yes, okay. The question is about the Greek crisis.
Yeah.
If you would care to comment on it.
Actually, we are not involved because Greece is not a member of IDB and we don't have any relationship, economic or financial relationship. But of course, the Greek problem may affect Europe as a whole. Of course, we are very much engaged with Europe. We already have big deals with the European banking system. We have a lot of cooperation with them. We have deposits, we have money deals that most likely may affect us. Because if any problems with the major European banks, this will affect definitely IDB. So we have to reassess our relationship. But we don't have direct relationship with Greece.
Mr. President, I wonder if I could ask one last question, which is about compensation of bankers. Because the compensation of bankers, one of the motivations of the risky behavior of the bankers on Wall Street was the huge pay that they were receiving, the huge bonuses. Each Christmas time I watched as $30 billion went out the door to a small group of people. And I thought it was amazing, and it was amazing, in that their banks collapsed, but they all became very, very rich. Does Islamic finance also have guidance about executive compensation?
Yes.
and also the ethics of CEO compensation, something that we could learn from.
Yes. Of course, as you know, the Islamic banking system have a number of levels of regulation and supervision and control. First of all, they are under the regulatory system of the country where they are. For example, an Islamic bank, say in United Arab Emirates. First of all, it is regulated by the Central Bank of United Arab Emirates. So there is control for that. Second, they have a special Sharia committee. Sharia committee. It is outsiders. It is like the external auditors, but for the Sharia point of view, they also have supervision on the activities of the bank, and they have to issue annual certificates. Besides, of course, the external auditors. And also we have a number of institutions like AYUFI, which issue standards, accounting standards and other standards. We have also the IFSB, the Islamic Financial Administrative Board, which is located in Kuala Lumpur. They also issued standards. So with all these supervision and standards, hopefully this could be controlled in the Islamic banking system. Until now, I didn't hear of any serious problem like that for the Islamic banks, but it could happen. But in any case, there is a number of supervisory and regulatory authorities, which I don't say that it will remove such a problem, but it will be very much minimized.
Thank you. Mr. President, I want to thank you for an extremely exciting and very clear presentation and very thought-provoking for all of us living a mile from Wall Street, which doesn't quite behave on these principles right now, but you've given us a lot of thought about prudence, morals, and ethics in finance also, and I'm sure that we'll be discussing these thoughts for a long time to come here. As I mentioned, it's an incredible honor for us to partner with the Islamic Development Bank at Columbia. And I want to say to the students here that as we embark on this partnership in the three major programs that I mentioned, the Millennium Villages Program, the Sustainable Villages Program, and the Drylands Initiative, we're always eager for student participation as research assistants, interns, and many other ways. So you can always express your interest to me, sachs@columbia.edu, very easy to find. Your email will be forwarded, I tell you, to people working on these various projects, but it will not be lost, and it won't be lost in the shuffle. People that would like to be engaged in these projects, we want you to be engaged because this is about the university as a community. You can see how exciting it is for us to have this partnership, and I do hope you will be engaged. Let me, therefore, with that note, finally conclude by giving our warmest thanks to President Ali and to all his colleagues for this wonderful talk and for being with us today at Columbia University.
With your permission, thank you. I want also to mention that the Islamic Development Group has a research institute. We call it IRTI, Islamic Research and Training Institute. We'll be very happy to fully cooperate with any professor or students who are interested in Islamic banking or Islamic economics through this IRTI. We could establish contacts with the professors and the students who are interested, and we can exchange information, and we give them any publications of the IRTI as well. There are a number of research papers has been issued by IRTI. It could be available through the site of the group or through IRTI. Thank you very much.
Thank you.